Hello friends, good morning to all of you. This is Timir Baran Chatterjee from TCN Global and Economic Advisory Services LLP. Today is 13 September 2022 and I am going to discuss a very important subject, and it is on MSCI India Index. We normally call Morgan Stanley India Index. And the news is the MSCI India Index has outperformed the MSCI Emerging Market Index by 27%. In the first part, I will discuss how this has happened, how such improvement has taken place. In the second part, I will discuss what is this MSCI India Index and what is this MSCI Emerging Market Index. And the third part, I will discuss how it is going to impact the Indian capital market, or you can say Indian economy. Now, there are many reasons for such improvement. You will agree that the government of India in the last 10 years had taken several proactive steps and policies to improve the investment climate of the country, which is very, very important. Now, there are many reasons, many policy decisions, but I would like to touch upon important 10 areas which might impact the overall economy of the country. One is GST implementation. Today we are expecting around 18 lakh crores collections per year, and we might expect 1.6 to 1.75 lakhs per month from November and December 2022. Then implementation of IBC, then implementation of Jhan Yogna, third. Fourth is the digital economy. I just quote the Ministry of Electronics and IT Department's notifications stating that India's $1 trillion digital opportunity is expected by 2025 and 26. It also states that it could support, that is, digital economy can support 60 to 65 million digitally enabled jobs, that is around 6.5 crores. Fifth is the right monetary and fiscal policy to control the inflation. Then, very important area, the government has taken a policy on PLI Scheme, Production Linked Investment Scheme. And very happy to inform you that some of the companies have already started raising invoice for the incentives, which means Many companies have already started doing the manufacturing activities under the PLI. It is no more a scheme. It has already been implemented to a great extent. And it is going to change the manufacturing scenario of the country in the next 3 to 4 years. Then seventh is the RERA related to the real estate. Eighth is the startup. India is one of the major manufacturing hubs or startup hubs of the world. Ninth is the direct tax rate rationalizations. You will be surprised to know that the manufacturing companies who are going to start the manufacturing activities before 31st March 2024, the effective tax rate, income tax rate is only 15%. It is probably the lowest tax rate in the whole Asian region. And 10, of course, implementation of Mudra Loan for MSMEs. These are the 10 major factors, according to me, would change the Indian economy to a great extent. Next area I would like to discuss that what is this MSCI Index and MSCI India Index. India Index has surpassed MSCI Index. MSCI Emerging Market Index, they consider 24 countries, large companies, based on 3 parameters. 1, dividend payment, 2, market cap, and 3, the turnover of the company. Based on these 3 parameters, they select large companies from these 24 countries. And based on that, they prepare index, and that index is known as MSCI Emerging Market Index. Now you will be interested to know which are those emerging countries that are considered for the purpose of this evaluation. As I have said, there are around 24 countries, and they are Brazil, China, Philippines, India, Malaysia, Thailand, Turkey, United Arab Emirates, Saudi Arabia, Kuwait, Qatar, Colombia, Czech Republic, Egypt, Greece, Hungary, Indonesia, Korea, Peru, Mexico, Poland. These are around 24 countries, and based on these 24 countries, major companies, they prepare an index called MSCI India Index. India is also considered there. Now, here 2 important informations to be noted. In terms of weightage, India ranks second after China, and its weightage is more than 14%. These two informations are to be reckoned, that India ranks second in this emerging market index and its weightage is 14. Now this is the index made for emerging market. Side by side, they also prepared the India's own index. While preparing the MSCI India Index, about 109 companies are considered, Indian companies. In terms of their performance. What are the three areas that are considered? One is the dividend payment, two, turnover, and three, market cap. How many companies? 109 companies. Now if you want to know which are the first 10 large companies that are considered, you may be interested to know. And these are ICICI Bank, HUL, HDFC, Bajaj Finance, Axis Bank, L&T, Infosys, TCS, Bharti, and Reliance. These are the 10 companies These 10 companies actually take care of 85% of the total weightage. This is very important to know. Now, the third part which I want to discuss, but before that I want to summarize the first two parts. That first part we dealt with how this improvement has taken place, which are the major policy decisions the government had taken in the last 10 years. Second part we discussed what is MSCI Index, India Index and Emerging Market Index. We have said that in the MSCI Index about 109 large companies are considered, and in the MSCI Emerging Market Index 24 countries are considered. And we have also discussed the companies are selected based on three parameters. One is turnover, two is market cap, and third is dividend payment. These are the three factors that are considered for selecting a particular company in the index. And the third part which I would like to discuss, how this MSCI Index will help our country in the areas of development of capital market. As the Indian economy breaks old molds to emerge as the world's fifth largest economy, it is also now the fifth biggest equity market as well. So in terms of economy, our position is fifth. In terms of market cap also, our position is fifth. The recent rise of the Indian stock markets helped India reach a global market capitalization share to an all-time high of 3.5% of the global capitalization. What was the position? In May 20, India was contributing 2.05% of the global market capitalization. And now India's share is 3.5% of the global capitalization value. A great improvement has taken place. So, at the end of July 22, India's market cap to GDP ratio was at 102%. I repeat, 102% of the GDP of the country. At present, India's market is approximately $3.5 trillion market cap. In terms of value, 283 lakh crores. It has surpassed our country's GDP also. So, with the improvement in MSCI Emerging Market Index vis-a-vis MSCI India Index, India can certainly expect a better inflow in the market. It is the expectations because FII, foreign portfolio investors, they are very, very keen to see the index. Now, there are few points to discuss further. India can maintain this position provided certain areas we take care of, that is inflation. As you know, the latest inflation figure, which is 7%, whereas the prudent inflation should be in the range of 2 to 3%. In the currency front, we have done exceedingly well. If you compare it with euro, Japanese yen, sterling pound, the GST is a very, very important area, and there we have been doing exceedingly well, and we expect further to improve. So, does it mean that the golden era of the Indian economy is here to stay? It's a very difficult question, but it is expected that with a strong monetary and fiscal policy to control the inflation, lowering of fiscal deficit, today it is around 6.8 or 6.9% of the GDP. It has to be brought down to 3 to 4% with the implementation of the wage bill, smooth implementation of the IBC, controlling trade deficit. It is an area of concern. Achieving a food production target of 326 to 340 million ton during 22-23, that is July to June, and a change in the judiciary system for early delivery of judgments can certainly help the country to maintain these positions for a long period. It is not the decade for India. I would say it is the century for India. If we take care of these 6 areas: inflation, wage control, smooth implementation of IBC, controlling trade deficit, continuous growth in agriculture with a food production target between 326 to 340 million ton, effective implementation of judiciary system for early delivery of the judgments, particularly in the commercial segments, and strong health and education infrastructure. This will certainly help the country to continue its growth, and it will be the century for India. Friends, thank you very much for your patient hearing. If you are convinced about my deliberations, if you like my deliberations, please like it, share it, and of course subscribe it. You will continue to get similar deliberations on various taxations, finance, economy, and other relevant areas from time to time. Thank you very much.